Hello everyone and welcome to a new ATFX video. My name is Gonzalo Canete and I'm here in this occasion to give you a quick update on GBPUSD, the cable, one of the most important forex pairs, and particularly an update on the UK economy. Why? Because 19th of December is the right day. The decision of the Bank of England will take place on this day about cut the interest rates or keep on hold the interest rates. I also include in my presentation, my usual presentation, I also include one of the topics, one of the news related with the analysis team from Barclays, UK, which was suggesting that Bank of England probably will keep on holding interest rates this 19th of December, and they got their reasons. Anyways, in my case, I collect few different variables, few different macroeconomical magnitudes that I believe could explain why the Bank of England got certain reasons to keep on holding interest rates and also certain reasons to cut the interest rates. Basically, they are in the middle of a really important breaking point. So let me share the whole screen with you and let's start. By the way, just before we start to explain all details about this, at the end of the video, I'm gonna also show you my technical analysis on the cable to see what is the main goals in terms of price and potential movements on this pair. But before we start, please remember, subscribe to our channel, click on the bell to receive the notification anytime we update new market news. Now, going to the presentation, UK interest rate decision, a delicate balance. Why? Because I mainly collect 6 different reasons, 6 different topics that are affecting this decision, in my opinion. One of them is the rising inflation. I will explain to you this in a minute with charts and with facts. The other one is the improving income, which is the average income per house, per home in United Kingdom is also improving. House market recovery, because it seems that the last few months has been back on track, rising a little bit the sales of new homes. Economic stagnation, we will see that the GDP of England is getting flat and slow every month after month, which is one of the main reasons to cut the interest rates. If there is any reason to cut the interest rate, is that one. Manufacturer confidence lost and weaker retail sales. All of these are macroeconomical factors that could influence the Bank of England decision to either cut the interest rates or to keep them on hold. And obviously, that decision will affect the forex market and also the equity market related with the pound. Now, going to the point, in the case of the growth rate of United Kingdom, there is certain things like change. If we recap what happens during the last few months, during the last, basically during the whole 2024, the whole year, we can see that in July, in summer, we got the UK elections and a new government after 16 years come into the house, come into the government, which is the Labour government. The point is, they didn't change too much the policies, but one of the things they announced is a new fiscal policy, rising the taxes. And I just mentioned, Bank of England, not just me, Bank of England believes that that increase on the taxes could affect the economy by distortion the economy, by depressing the economy, by depressing the sales. One of the variables we are going to study now is the retail sales. So after all, if the taxes are increasing, it's generating a kind of additional cost effect on the products and services. July election impact, so this is mainly the impact. Now, going to numbers, this is the first chart I want to share with you. British economy has stayed for 6 months. It's completely flat, as you can see. Even when in 2024, the beginning of the year, it was showing us, in terms of growth rate, showing us better numbers than expected, which it was so positive for UK economy, which it was little by little stepping out from the European crisis that right now is facing. Germany is in this problem, in this issue. France is facing a similar numbers too, but for the last 2-3 months, the UK economy is showing very similar numbers. In terms of inflation, as you can see, since September, the inflation has been rising. It was 1.7, then 2.3 in October, and the last one published last week, 2.6%. Last week or this week, I don't remember. Last CPI index inflation in United Kingdom was showing us 2.6% inflation in November, which is not good. It's still getting away from the target of 2%. But the most important thing is showing us a clear trend uptrend in inflation. And therefore, this could be a really, really red flag for Bank of England to do not cut the interest rates yet. Average earnings index plus bonus is showing us that the incomes are not dropping, so therefore is not there is no urgency on cut the interest rates from a society, from economical perspectives in terms of families. Is not affecting the consumption, although weaker retail sales. Also, the retail sales saw a downtrend, and therefore we could expect either these numbers can get adjusted by the average income, or the other way around. These numbers gonna show a certain impact on the average income in the coming months. I believe is the first case, right? Manufacturing sector is also dropping, down from 6.8 on the Q3 to 5.8 on this Q4. And the forecast contraction is minus 0.2%, as you can see here in Reuters news. UK factory take fright and budget adds to cost pressure, survey shows. Now, going to the chart, which is something that most of you are expecting right now. Okay, fine. You got the numbers there. You just give me a super short, quick update about what is the macroeconomical results of the UK economy for the last few months. I get it, but tell me what exactly is going to happen with the price based on the charts. I basically point two different targets in short term. 1.35, 1.3650 has a potential target in middle long term for the cable. But in a really long term, which is 2025, what's going to happen in the coming months, we could see that the picture is changing completely. And you will understand in a second. If I show to you the short-term charts, we can see with the daily candles here that the price seems to be in a kind of uptrend, which is super positive. It's super good. Look, we maybe, if we continue moving forward, we maybe see 1.35, 1.3550, 1.36, even 1.3650. All of these three levels could be the target of the movement that is starting right now. We can see certain supports on those levels, and if the cable is resisting well in this area, it's probably going to start a new uptrend moving for the coming sessions, and probably by December and January moving up, going to those numbers. Now, if we take a look to the long term, instead of see just daily candles, we step back, step out, and we take a look in long term, we can see that we are in a short downtrend since 2009, and therefore that's why I believe those levels gonna turn back to the bottom parity, or even below parity if it's keeping in line with the channel. Well, I think that's all. It's a super short and clear review of the cable and UK economy. Hope you enjoy this, and remember, if you are not subscribed to our channel, subscribe to the channel, and please give me a thumb up if you enjoyed this content. See you in the next videos. Take care. Bye bye.